Hello, this is the TradeSight Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, the 9th of March 2014 and ending Friday, the 14th of March. Hope you've just completed a great trading week. Charts as usual brought to you by eSignal 11. Let's start as we usually do by looking at the dollar index daily chart. We'll go through some of the other pairs on their daily charts. We'll look at the intra-week action on these pairs, and then we'll look at the economic data coming out this week and devise a plan of what to avoid. So here's a look. We did have this 13 sell signal back early in January, and so far that has basically held the market in place. We've now drifted back down to the static trend line of the move almost. That's this red line. Note that we're now 6 bars into a new seeker count and also 5 bars into a new startup phase to the downside. If either one of those ends up lining up with that static trend line, the red line, I would think we would get a bounce off of that. But the flip side is we actually break these lows, we're going to get out of this range that we've been stuck in for the last 6 months. That alone would be fairly exciting to see. So let's take a look at the most heavily traded pair, the euro dollar, trying to break out on Friday. Only 5 bars into the seeker count there. Keep an eye on. We've broken down the green static trend line to the upside finally, so that's a significant break. And the red one way below at this point seems slightly out of range. Meanwhile, here's a look at the pound dollar. Very flat week on the pound. And again, starting a new seeker count. Notice that from when the last this 9-bar setup or startup phase completed, it was 1, 2, 3, 4, 5, 6, 7 bars before we got bar 1 of our actual seeker countdown exhaustion phase. So that is interesting to see as well, obviously. And then let's take a look at the Aussie dollar. Not much going on there. A little pop as well. Pound moved the least out of the three, obviously. And here's a look for fun at the New Zealand dollar. Now this one's got a nice breakout over the 0.8550 level. That was the top back in October when we got a 13 sell signal. It's been basing ever since. So we're going to keep an eye on this one because a breakout over that level is obviously something you'd want to be involved in. And also pulling up the pound yen. This one had another 13 sell signal back in December. That ended up being the high right at the end of the year. Get a nice rollover from that, exactly what you'd expect from a sell signal. And now we're based, and we've got a basing action formation lined up against the risk line. So a break over that would be positive. So we'll keep an eye on that. All right, let's take a look at the week. Here is the euro dollar. Friday, Thursday, Wednesday, Tuesday, and Monday's action. And this gives us from the start of the week. So there's the whole week on the euro dollar. If you take the low about 37.10, the high around 39.10, 200 pips. Now off the cuff, that's bigger than last week for sure. Here's the problem: it was Thursday that saw the 140 pips of that move. Everything else just dead flat. Tuesday through Wednesday was stuck in a 50 pip range for the entire 2 days. It's horrible. And Friday, not much better, even with a couple of data points. So again, one day was it in terms of the movement. That's not what we're looking for when we're trading the Forex market. Here's a look at the pound dollar. The top is it's about 150 pips of range. 150 pips of range completely on the pound for the week. And by the way, look where we closed, almost exactly where we opened, about 10 pips off of where we started the week. Really poor action again on the pound. Did have a nice winner, but that's about it. A lot of trades this week. Just a couple made it to their first target. A couple got stopped out. One was a little bit bigger winner, and that's it. We really didn't do a lot, and that's been the case for a while now, as most of you know who follow us. And so we're just kind of plodding along here. Here's a look at the Aussie, which did trade 220 pips. A little more vertical on this one. All right, let's take a look at the economic data, see what we can expect this coming week. Daylight savings time shift here in the U.S., also in Canada, Saturday going into Sunday. Be aware that that usually throws off the technicals in the market for a couple days. Now you've got half the world trading an hour off of where they have been. So that can have an impact. That's not usually a positive in terms of action, by the way. Current account final GDP bank lending out of Japan Sunday. We go into Monday. Economy watchers sentiment out of Japan. French industrial production. China's new loans and money supply. Retail sales out of Switzerland. Italian industrial production, got the Eurogroup meetings, not much in the U.S. side. Housing starts out of Canada early on Monday. We've got M2 money supply out of Japan, business confidence out of Australia, monetary policy statement from the Bank of Japan, and their press conference going into Tuesday. German trade balance, UK's got their manufacturing production and industrial production data, along with the 10-year bond auction. We've got job openings in the U.S., small business index, wholesale inventories, GDP estimate out of the UK at 10 a.m. Eastern time. That's late in the session for UK. Westpac consumer sentiment out of Australia, some minor Japanese data, home loans out of Australia, monthly Bank of Japan monthly report, consumer confidence out of Japan, French final non-farm payroll data, trade balance out of the UK, industrial production out of Europe. Wednesday here in the U.S., we've got crude oil inventories, 10-year bond auction, the Fed budget balance in the afternoon, speech from Treasury Secretary Liu. Then you go into New Zealand's rate announcement out of the Bank of New Zealand, their FPI. This is all on Wednesday. Core machinery orders out of Japan, Australia's MI inflation index, Bank of England quarterly bulletin and their RICS house price balance, employment data out of Australia, industrial production out of China, along with retail sales and fixed asset investments, French CPI, Canada in the morning on Thursday, capacity utilization rate, U.S. is releasing retail sales, their weekly unemployment claims, import and export prices, business inventories and natty gas, 30-year bond auction here in the U.S., New Zealand's got a business index number, monetary policy meeting minutes from the last Bank of Japan announcement, revised industrial production out of Japan, and that leaves us into Friday, where we've got German final CPI, PPI out of Switzerland, employment change out of Europe, PPI out of the U.S., and University of Michigan sentiment out of the U.S. We do not have, by the way, any of our big three here in the U.S. We don't have a Fed meeting. We don't have options expiration. So what do we focus on this week? Not much to focus on. Again, the problem being the time change. Some of the bigger data is in the middle of the week. Let's just focus on seeing if we get some better ranges, because there's not an actual data point. We had both trade balance and the unemployment rate non-farm payroll number here in the U.S. Today on Friday of the prior week. So that's the 7th of March. So we've only got one other number left this month already. That's the CPI. And then if we get to, obviously, a Fed, we will have triple expiration the following week for options. But that's not this week. So this is a wide open trading week with not a lot of the stuff that you worry about, but still a decent amount of economic data. Let's hope that that can translate into some better movement in the market. We certainly cannot be excited about what we've been seeing. As usual, we will be calling them in the trading lab and here to help you make money in the markets. Have a great trading week and a great weekend.